Hi, good morning. It is Mortgage Monday. I am so excited it's Monday again. I feel like it's just gone so fast through the weekend. And speaking of weekend, how was yours?
My weekend was great.
Yeah?
I'm Jesse Griffith. This is Jamie. Since we've got to say our names.
Oh, we did. That's okay. I'm Jamie.
You all know us by now.
We know who we are. What are we talking about today? We're going to talk about
something that's, I'm seeing a lot more trending on Facebook with sellers, agents posting about an assumable loan.
Yes. So assumables are the hot topic, and that's because interest rates are a little bit higher than the norm. And with the assumables, these rates have been looks like in the 2s and the 3s from what I'm seeing on different posts.
So yeah, the assumable loan is something that is out there. It is available normally with your FHA loan and your VA loans.
Correct. And so with VA assumables, it's not a quick process. It actually takes some time. You have to go through the loan servicer of where the sellers currently have their mortgage held. And I've seen buyers, it'll take 30 days just to get an application looked at and possibly pre-approved.
So the way it works is you contact the servicer who currently has the loan. Mm-hmm. They're going to go through that whole process with you, and there's not a whole lot of money to be made on the servicer side of it. So you're going to get kind of the bottom of the grade loan person at that loan company.
Correct.
So there's not a whole lot of money to be made when it's an assumable loan. So you're going to get the bottom of the grade. It's going to take very long. In most cases, it takes so long that it's not really something that is going to be feasible for the seller or the buyer.
Right. It's not a priority of the loan servicer. So therefore, they just let it sit. It could take 90 days. And with the assumable, you have to keep in mind that whatever the seller owes, say for instance, the house is on the market for $350 and they only owe $200. Well, there's that gap that the buyer will be responsible for either getting another loan, possibly, or they have to pay that difference in cash. Not everybody has the type of cash just laying around to pay the difference, because you're only assuming what the seller has left on their mortgage. You're not assuming the full amount that you may need if they're having it on the market, say for instance, $300 and they only owe $200. So there's that difference of the gap that you would be responsible for.
So most of the time, this isn't going to be a product that somebody, out there shopping that doesn't know the seller, that they're going to be something where they're going to be able to work this out. A lot of times it's going to be a family member selling it to another family member who has that equity, has that cash, to be able to pay out the difference of the sale price and the loan amount.
Correct. And with VA, did you know that you don't have to be a service member or a retiree or a veteran to assume a VA loan? You can actually be a civilian or first-time home buyer. In that sense, you don't have to be a veteran or active duty, but I will tell you that there is entitlement eligibility that does get tied up if you were to assume a loan and you were not a veteran or an active duty service member. For the seller anyway, it still holds on to their entitlement and eligibility. So if they were trying to purchase another home, it could impact that.
Not only that is an amazing pro to it, that it is something that can be done.
Right.
But the other con to it is the entitlement issue. And say that person defaults on that entitlement and stops making the payment, you are now not going to be eligible for your next VA loan because the person that you sold it to defaulted on that entitlement.
They might, it depends. But what I'll say is that it does impact the seller whose entitlement is tied up on that property even though they don't live in it. So if they're defaulting, it goes back to the seller actually, because it's their entitlement and it's their eligibility on that loan. So it can get a little tricky when you assume. It can be done, but just keep in mind it does take a couple of months. It's not a quick process. You still have to qualify for the loan in regards to the process.
Yeah, so it can be very complicated, and if you have any questions about that, just give us a call. We'll be more than happy to go over what available options you have at your fingertips. And
yeah, we would love to help you answer the questions. Obviously, we can't do the loan application because you have to go through the loan servicer. but we can be there to guide you through the process. If you have any questions, let us know.
And we're here for you. And if you've been through this process, comment below. Let us know exactly how it went for you. If it didn't go through, if it did work out, if it was a terrible process, if it was wonderful.
Yeah.
Let us know. Like and comment below.
Thanks, guys. We hope you guys have a great week.
Thank you. Have a great day.
Bye.